G20 finance ministers are meeting in Argentina to address commodity prices. They're concerned about volatility. Now, you may recall food prices have broken 2008 records since about late 2010, according to the United Nations. Really been rising, continue to be on the rise. And in the spring, World Bank President said the world is climbing out of crisis, of financial crisis, but that the risks of high and volatile commodities prices were threatening that. Now, the World Bank also has just released a report saying the U.S. dollar's dominance will be done by 2025. So a lot of news coming out, and earlier I spoke with Peter Schiff to break it all down. He's president of Euro-Pacific Capital, and I asked him what's behind the volatility of commodities, because there are a lot of factors that go into it. Some of them are crop failures, and of course investor speculation is a big one. Here's what he had to say.
All these countries are printing too much money. They're all debasing their currencies. Of course, we are the leader. The rest of the nations seem to be following in our footsteps, unfortunately. So since so many central banks are creating so much money, commodity prices have no place to go but up. And the more money they print, the higher prices are going to go. You know, obviously volatility is part of a market, and when you get these huge bull markets that these countries have caused by their irresponsible money printing, you're going to also have greater volatility. And if they want to put an end to the upward trajectory and the volatility, they need to turn off the printing press.
Of course it's here. I mean, in the first place that you would expect to see it is in commodities, particular agricultural commodities and precious metals, which I think are the most sensitive commodities to inflation, and that's exactly what we've seen. And this inflation, it's not because of the weather. Politicians always want to blame inflation on other things like the weather or speculators or greedy corporations or labor unions. It's got nothing to do with those factors. It's all because of money supply. It's because of quantitative easing. It's because of stimulus. This is the consequence of what the government has done to try to stimulate the economy by running huge deficits, and the Fed prints money to buy up treasuries. That expands the money supply, that diminishes the value of money. That means prices have to rise, and that's exactly what's happening.
Right. So the other thing that some people would say is causing this inflation is faster economic growth. China just put a GDP report out, 9.8% for the fourth quarter. Is there a link between economic growth and inflation?
Yeah, but it's the opposite. The more economic growth you have, the less inflation, at least if you're measuring it by prices. Because when economies are growing, they're growing their production. They're producing more goods, and that puts downward pressure on prices.
It's 16. World food prices now slipping to a near 7-year low. That's according to the United Nations Food and Agriculture Organization. The latest FAO data shows the food price index fell 16% from a year ago, hitting its lowest level since April of 2009 amid ample agricultural supply and a slowing global economy. The index tracks international market prices for 5 key commodity groups on a monthly basis: major cereals, vegetable oils, dairy, meat, and sugar. The bottom line, food prices are falling just like oil.